Welcome back, everyone, to Organically Successful, and hopping right into this one, breaking down the dollar index. We had a pretty good week. Brought bought I brought my two accounts back from drawdown, and we could bat break even on one on the funded, and our second account up 3%. That's a second account that I have that I just using where I just enter in trades where I believe the market will turn. I want to get that one up also. I want to obviously get funded on that one too. So I got our two funded accounts. And yeah, but we back to break even on one, up on the next one in a month where I wasn't expecting to do any trades. So yeah. Anyways, I just clean up the chart here and we're doing our weekly analysis. I could see we just tap into the sell side here on this was what, Thursday. Friday we had a positive day, bullish day, but we did close below these low, so look like dollar still pretty much bearish. We did trade up into this down candle here Friday, and we couldn't get above it. We just load more buy side, so we still bearish. Tapping deep into the discounted market. We have a weekly order block here, so we'll see. We drop to the small time frames to see what inefficiencies we have here, but we definitely look like we're trading to go down here. So this black candle here, this green candle, we close below this one that I thought would have been used as a order block, the last down close candle before the up move. So we back bearish. So we back bearish on dollar, and we saw the news by the Fed, where Fed news was on Wednesday, and pound Fed said they're going to hike, they're going to cut some rates, I believe, and pound said they ain't changing their stance on the interest on inflation. So I could imagine that pound would have obviously saw that, and we did see pound and foreign currencies went up. So we back bullish. We were always bullish, but that week we had a couple of days, where we were a little bearish, and a market condition like that, that's where you could be buying on discounts. So the last down close candle, the last up close candle before the down move, this ran some liquidity here. The high on this is 26.3, 26.2. Alright, so there's the order block in here. Bearish. I can put it red. Good. Drop to our daily chart. We have a big gap in here. Volume imbalance. Inverted fair value gap. And here. Alright, so I'm gonna see half of this candle. Alright. Here's 50% of the week candle. Right in here. High, low, high. We have a breaker here. And we have a volume imbalance here. So you can possibly get as high up to the halfway of this candle here before we continue selling off. Yeah, we could get as high up to here before we continue selling off. So I'll just label this weak. Let's go to encouragement. Right. Today, right, Friday, where Tuesday. This was the FOMC news driver here. Yeah, I can't remember what I was doing Tuesday, to be quite honest. Can't remember what I was doing Tuesday at all. But I don't think I was on the charts Tuesday at all. I think, yeah, Wednesday I get a good trade. And after that, I just called it a weekday. And, oh yeah, Tuesday I had some stuff to do. Got through to a job in the evening time. So I was organizing that. Yes. I remember. Good. So, we have volume imbalance here. Order block in here. So we could get as high as in here. Could get as high as in here throughout this week, but it's not likely because this week we have, according to seasonal tendency, the second half of December tends to be weak. Today is the 16th, market opening today. Well, tomorrow on Monday we trading. That'll be the 18th, that'll be the second week. So we still bearish. So I'm looking for shorts when price get up into the volume imbalance and here. So that means on pound, I'm looking to buy. Right, so that means pound, we looking to buy. I have some other currency in here with pound, because pound interest rates high actually. So I want to backtest some stuff with the British pound, where British pound is the base pair. I want to backtest some of those charts and be bullish on pound. Because if I bullish on pound on the dollar, you know, it makes sense to be bullish against other pairs where pound is the base against other weaker interest rate pairs. So I'll take a look at those in a timing. But focusing here, remember everything I do on this chart for pound, it will be the same for the dollar index. It will be the same for euro. All higher time frame long term target was the top here. We finally see the delivery on the 30th buy side liquidity pool I was talking about all the past couple of weeks. We reach all the way up into the 23rd. So we just loaded right there. So we're definitely going to attack that coming into going into next week. So we ran this liquidity, so I could move this. We ran down right underneath. We had a forward order block in here. We ran down in it right before FOMC. We traded up. I mean, I could have definitely got through everything I wanted without even getting this move up here. But this week I had a lot of red follow news. I wasn't feeling comfortable permitting into certain positions now. So I was just taking, really and truly, I was just closing off my positions at wherever I saw 1% on the account, I was closing it off. So pretty much easy, straightforward. We traded up into this big imbalance. Yeah, we traded up into the big imbalance on the buy side liquidity pool from a higher time frame. We had a very higher time frame liquidity rate. So obviously after we break out of this range in here, we have a shift in market structure to the upside because we were delivering price down. We trade down into this imbalance. The lowest on this was 50.21. This is 50.01, 50.02. So we ran down, took this liquidity pool. FOMC was Wednesday. We traded up. We closed above here, so we have a shift in market structure. So we're back bullish. We're only looking for long. So anytime we see using standard deviation to find the projected lows and close above the rejection block. Right. So I'm going to drop on to the smaller time frame to see where our potential imbalances are and where the market will be more likely to trade down to before we continue going up. Opening on this candle is 58.76. All right. Our new sell side will be nesting right here. Actually, what am I even talking? Be bullish. So our sell side will be right there. Lowest on this is 66. Right there, sell side. Nice. We have a shift in market structure. Friday, Tuesday, right here. And we're back bullish. Do not range liquidity. Going up, so it's internal range liquidity. Going to external range liquidity. Right. So a continuation on Wednesday. Alright, let me see how Tuesday trade. Alright, Tuesday open. Tuesday is a continuation on Wednesday. Tuesday open. Went right underneath. Tuesday open. Trade up, went down. Boom, trade up. Friday. Traded into the liquidity pool. Sold off. Really? Alright, Friday sold off. Friday was a reaccumulation day. Alright, so we're definitely bullish. Still, it was pretty obvious. So, let's hunt on longs. So when Monday open, if I gap in here, Tuesday. Alright, if I have a gap in here, Thursday was bullish, Friday. Alright, distribution continuation. This is up reaccumulating longs to continue going up. Alright, so Wednesday, Tuesday. Tuesday open price. Alright. 67 70. Wait. 63 73 63 73. This was last week Tuesday opening price. All right. It's Tuesday open. Tuesday opening price, trade up. Boom, 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 boom. Friday open, trade back down. Alright, so I'm looking at Tuesday opening price. Alright, so when Monday open, I'm watching this gap here from Wednesday, right? But I don't necessarily have to get filled one time. I'm gonna see what the news looking like for Monday. This week coming up here. Alright, there are no real news Monday, no real news Tuesday, CPI, Wednesday for pound, unemployment claims. Alright, we have nothing major in the market for manipulation. So what I'll do Monday, if we get down into obviously this range here, we have some confluences here. We have a fair value gap in a bullish market, and we have a liquidity pool underneath here. Also, this is the opening price for Tuesday after Friday pullback in a market structure shift. Wait, everything alright here, right? Oh, great up here. Alright, so we have some confluences here. We have liquidity pool here, daily higher time from liquidity pool. Alright, we have a higher time from liquidity pool here and here. We have a forward liquidity pool here, 1 hour fair value gap in here. At Tuesday opening price, Tuesday was a day where the market continued from Friday. It was a bullish day. The imbalances here and never pull liquidity. So I want to see is if the market open and trade up and then come back down into here. We're looking for longs. I don't think the long, if Monday give a buy, would be the low of the week. Alright, I'm looking for the low of the week Tuesday, maybe Wednesday, because we have CPI coming into the market Wednesday. But if so happen Wednesday trade up into here, I can anticipate that could be a little sell off to fill back gaps. But again, we already had a market structure shift. We are bullish going into this time of the year anyhow we take it. So yeah, Monday could definitely give me a low to it. But not too sure Monday will be the low of the week. So what I'll do is obviously look for the buy signal. If you get down into Tuesday open, closer to 0 minutes fair value gap and respect it, then I would hunt a long up inside of here. We have a market structure shift, as I say here. In a bullish environment, we do have to go all the way back down in here. So looking out for buys in this region. And yeah, that's about it. Pretty easy analysis, and we'll just see how it play out, and I'll catch you guys back next week.